Okay, good morning guys. I'll be doing another video for you guys regarding market structure, breaker structure, and I'll be using a different chart in this case. Let me use, I don't know if this was the chart we used yesterday, but let me use this chart. Looking at this chart, I think this was the chart we used yesterday. Let me change this chart. Let me use another chart. Okay, let me use this chart so that you guys will understand. Let's take a look at this region. What is your market structure? This is your market structure for a bigger time frame, like maybe a 1 hour, 4 hour, or daily time frame. This is your market structure. They are the main moves, like the last, for a bullish trend, it is the last main low before a main high, then same like that, the same routine, the last main low before the main high, the last main low before, let me do it again. For a bullish trend, the last main low before the main high, another main low before the main high, without breaking the previous low, then once again the same thing, the last main low before the main high without breaking the previous low, the last main low before the main high without breaking the previous low, like that. So this is your main structure for a bigger time frame. And what is our breakout structure? The direction where the market breaks to is our breakout structure, which will indicate with what? BOS. Will indicate with BOS as our breakout structure. Indicate with BOS as our breakout structure. The same thing goes for the downside. Assuming you're having a downtrend, is what the main high that caused a low, that caused another high that didn't break out of the previous high, that caused another main low, that caused another high that didn't break out of the previous high, that caused another main low, that caused another high that didn't break out of the previous high, that caused another main low. This is our market structure for a bearish trend. Market structure for a bearish trend. This is our BOS, and this is what our BOS. This is what our BOS. So what for the bullish trend, which is the buy trend, our market structure is the main low that caused a main high, that caused another main low that didn't break out of the previous low, that caused another main high, and like that, the same routine, caused another low, another higher high, another higher low, higher high, higher low, higher low. So market structure for a bullish trend is made up of higher highs, higher lows, higher highs, and higher lows. While a market structure for a bearish trend is made up of lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Get this, I write it down. Then when we talk about a market structure shift, or a change of character. A market structure shift is when the market retests back and breaks out of a main structure. This is a main structure. The market retests and break out of this structure. It is now known as what? A market structure shift, which means the market is about to reverse to the downside. So after this, what do we expect? Expect price to push into this zone, and we'll start pushing down to the downside, giving us lower lows higher low, lower low, lower high, sorry, lower low, like that, giving us breakout structures to what, to the downside. Same thing goes for the buys, for the bearish, the sell side. It breaks out of the main high, confirming the potential reversal, giving us what, higher low, higher high, higher low, higher high, higher low, higher low. This has confirmed what, the reversal. So now this is now giving us breakout structure to the upside, So all these that I said here are, all these structures are what, main structure. What are substructure? In a 1 hour or a 4 hour time frame that you check, you might see the chart do like this, right? For a bullish trend or a bright trend, right? But when you scale lower to that same chart, maybe 30 minutes or 15 minutes or 45 minutes, see the chart do something like this. See the chart dance, and what? Dance and break structure. See the chart dance, and what? Break structure. All this dancing are called the substructure. All this dancing are called the substructures. All this dancing are called the substructure. All this dancing are called the substructure. Another word for it is also called internal structure. Don't be confused. Many people use different grammar, but the thing is just understand what you are doing. Some people can call it internal structure for this smaller one, call this bigger one main structure, or you can call this internal one substructure, like that. So what really matters in this chart, what you should be looking out for a market direction, is the main high that caused what, that caused the main low, and not the internal structure. And the main low is the last low what, before the main high that broke out of what, the previous high. I don't know if you guys are understanding it. The main low, this low caused this high, the main high that broke out of this structure. So your structure again is the last low before the last high, before the next last low, before the new high. This is what it is. The same thing go for the downside. The downside is also the same thing. Do you need something? What is that?
How many what is this?
2.
Yes.
Yes.
Then yeah, you check out this bit.
No. Except maybe left and right. No, there's no checkout. You see anybody there?
No, I don't see the no that was
Same when he went out yesterday. I don't know whether I entered again in the night.
well, the two is that side. I don't know. The other side,
On the rooms. The other side, it's room 5 only.
only room 5.
Yes.
But you said you have 2 lodges.
One was here and one was room 5.
Okay. Alright, continue.
So same goes for the downside. You can see many minute structure. All those things are called substructure. They don't matter. What you should highlight is the main thing where your eyes wouldn't be broken up. You get. So what, like I said, all these right here, substructure, all these right here, short structure. The market will do a lot of things, nothing concern us. Now, what they want to do? All we need to do is to focus on the main structure so that we won't get swept out when we want to take our entries. So what? For this bearish trend, the main high across to what? The main low that caused a higher high that caused on what? The high that caused what? A lower low that caused another what? A lower high that did not break out of the previous high that caused what? A lower low and that caused what? A lower high. So this is it. So all these are breakout structure. All these are breakout structure. All these are breakout structure. So let's give you a chart example. Focusing on this chart. You see this. See this. See this. See this. See this. A lot of you might be confused with this, but guys, this is what it is. This is what is valid. I'm just giving you an example. You see these lines that I draw, these are the main lines. Why are they the main lines? Because this is the last low that caused this high, that also what caused this low. This is the last low that swept every other low. All these low right here, all these low right here are internal structures. This low also caused what? This high, right? That caused what? This is the last low, and the last low did not break out any of those lows, did not break out the previous low. You can see that the market did a lot of dancing here. That one is not our business. It's the main structure that we are looking for. Before what? The market give us what? This main high, right? Then what? Market give us this low, this last low here. This last low, you see, I actually swept this low. To a lower time frame, we swept this low. Give us this last low here. Then what? Give us this new high, right? So most people, this market might look confusing. They may mark out a lot of wrong things, but this is actually the right thing. Look at it and see it for what it is. So when you see something like this, if you want to take a trade, you should be taking a trade towards to the upside and not to the downside. Okay, I want to make this video as short as possible for others to understand. So this is what it is. Each of these candlesticks simplify an hour, become on the 1 hour time frame. If you scale lower, you see that those minute structure will be bulky. See those minute structure. See that they are bulky. See that they are bulky. See those minute structure that are light. See that they are bulky here. But on the bigger time frame, you can easily spot the bigger picture on the bigger time frame. The smaller time frame, when maybe when you want to take analysis on your trade, you can now see those minute structure. So this will be it for today. Okay, yes, a market structure shift. Let's talk about market structure shift that I talked about here. Market structure shift. Let me look for a good example for you. Market structure shift. Market structure shift. Okay, see this place now. Consider the market does good words. Let me use a bigger time frame. Room 1. I think somebody collected that key yesterday. CSO in the monitor. I don't know what you wanted to do. So looking at this, we can see a very clear picture here. This is what a low. So I need to zoom it out so that you're able to see a longer distance. This is a low and high, a low and high, a what? A low. Take a closer look and high. Forget this dancing. What? A low and high, another low and high. Or let me remove this place so nobody will be confused. But it is what it is. Okay, let me just make it 1. See this low, right? Let's just take it from here. Let's take it from here instead. See this movement. Okay. No, let's actually do that. You understand something from there. See this what? See this low, right? See this high. What? See this low. Don't mind if I draw this candle. There's a breakout here. If you look what there's a breakout, don't mind if I draw this candle. See this low. What? See this high. Right? See this low. See this high. See this low. Right? See this high. This is a market structure shift. Then it swept to the downside. And it started giving us series of sub highs and low, but altogether it gives us this high. Okay, low, high, low, what? High, low. If you notice here, there's a high here, there's a low here, there's a high here, there's a low and high, but we are taking the overall. Here there's a breakout structure. I'll scale lower so that you see. There's another high here, there's another low here, there's another high here, there's another low here, giving us a reversal to the downside. High here, low here, high here, low here, what? High here, low here. Changing market structure shift again here, high here, low here, high here, low here, high here to the upside. I don't know if you guys understand this. For the main structure, this is what it is for the main structure. This is what it is for the main structure. High, low, high, low, what? High. But for the substructures, those are what I showed you. Potential market structure shift in a smaller scale. Let me scale lower so that you will see it better. Okay, we notice the series of highs and lows. We notice what? The market structure shifts here. The market structure shifts here. This is a main breakout high, right? We will notice what? The market structure shift here. Notice market after that reversing to the downside, right? Notice what again? The market after the market reversed to the downside from this angle. What did the market do? We're expecting the market to push up to this region and sell, right? But the market does its things, like I said. It will not produce full of the market. Some people might have lost here, you get. But the market started pushing up, giving us a series of newer highs and newer lows, but not as big as this. Highs and lows, breaking out the structure. This is actually a breakout structure, right? But from the bigger time frame, this is not valid. This is a breakout structure. But from the bigger time frame, it is not valid because this is not the trend from the bigger time frame. Like when you go to 4 hours or 3 hours or so. I don't know if you understand me. This is all just a minor pullback from the bigger time frame. So if you notice again, after giving us a series of highs and lows, the market came to this place, gave us a breakout structure here. This is a breakout structure, and those give us a market structure shift. I like this breakout structure. Give us a breakout structure, and here is also a breakout structure. Nobody should get confused. Remember, main highs and main lows, not the substructure. And here is what a market structure shift. This is not with the week, I might put it with the word, not with the week, because if body broke past that week, you get. And after that, what did the market do? Market started giving us reversals, right, to the downside. Started giving us reversals to the downside for the market structure shift. It is that simple. You just need to be able to spot the main highs and main lows. See it after the market structure shift. Boom, reversals to the downside. a day will be all. You can try this with different charts. Just try. Don't complicate yourself with things. Do what you see. The market does not give us. You cannot predict the markets. We just see it and take it. You get it. Once you see it, you take it. It could be only the first breakouts you can take or the first 2-3 breakouts. You understand? But it does not always do that. It does not always do that. You cannot always make profits from all. We wait, we watch, and we take our trade. That's what we do. I hope you understand from this. Thanks for watching.